So the question is, will Bitcoin always be a good investment? And the answer is, at some point, if it plays out the way I predict, let's call it 50 years from now, 50 years from now, Bitcoin will not be an investment, it will be money. Because as an asset goes through the process of monetization, eventually it arrives. And when it arrives in a place where it is the monetary system of the world. It has absorbed tens of trillions or hundreds of trillions of dollars in value, and then it has stabilized. So what will happen at that point? Well, at that point, when Bitcoin is the new monetary system of the world, the appreciation in purchasing power will be about 2 to 3% per year. The reason for that is human productivity and population growth and all of that goes up at about 2% to 3% per year. As a result of that, if you have a monetary system that is finite in supply, but productivity is going up 2 to 3% a year, that means the total goods and services you could buy with that money goes up by 2% to 3% a year. So most people in the future will keep a substantial amount of their assets in money, i.e. Bitcoin, because it's a risk-free return. Now, people would say, well, treasury bonds are a risk-free return. And of course, they're not risk-free because they have all sorts of problems. What happens if the Fed raises interest rates? What happens if they lower interest rates? Like, there's a huge amount of risk that comes with owning treasury bonds, including default risk, that does not come with owning Bitcoin. So first of all, you get sort of a risk-free return of purchasing power of 2 to 3% per year. When Bitcoin is fully monetized. But also at that point, very importantly, we don't have boom and bust cycles anymore. The 2008 housing bust, all of that was a function of the manipulation of the money supply by the Federal Reserve. When Bitcoin is fully monetized, meaning it is the default monetary system of the world, you won't have those boom and bust cycles, which means assets like real estate, stocks, and bonds will be fairly valued. They will not be in bubbles caused by cheap interest rates and money printing, which will mean you will actually be able to invest in things that are appropriately priced, not manipulated by the money supply, and you'll be able to get a return accordingly.